Good morning. Hopefully this mic is not too loud. So, more coffee um, art discussion. This morning I made an espresso after my wife woke up, said hi to the family, blah, 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 and went for, I don't know, trying to create something. And then it turned out it looked exactly like a dove. Tail, wings, head, all of it. Perfect proportions on the body. So of course, what do? I'm like, babe, look, I made this beautiful dove. She just laughed and said, oh, probably intended, right? I said, of course, always, if it turned out beautifully. It's kind of like trading, isn't it? We um we get into our positions, it works out, and then after the fact we go, oh, let's see if we can bias all of this um, and make it look really good. How often does that happen? We look at something after the fact and we go, "Yeah, of course I knew this was going to happen like this," or not. Anyway, good evening, Alfred. Good morning. Um, you know, I was thinking a little bit last night about where I play in the markets, and I've long talked about, hey, play at the extremes, play at the edges where mean reversion is possible. And, obviously you can play breakout moves, explosive moves out of balance and stuff, but you're always going to have a higher probability of losing if you're playing what everybody else is clearly seeing as well. Um, and I was thinking, why does that not seem appealing to most people? And I think what it is, in part, I get the whole risk reward thing, right? Lower probability of success, huge risk reward that fits my style, blah, 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 blah. I work really hard to find these setups. Okay, I get it. But I think that what appeals to buying and holding for the big move with huge risk is that people want to hit home runs all the time. And so being patient and waiting for high probability setups, I don't think it's really built into a lot of people's DNA in terms of what appeals to them, right? Because I don't, I know that a lot of traders have heard what I've said over the years, and they're like, yeah, it works, it does work, but they they keep chasing this other holy grail that is more commonly discussed. And I think as human beings, we often do that in a lot of areas, right? It could be diet, it could be exercise, right? We're told by the mainstream, whatever is mainstream, we're told, hey, ooh, I'm going to enter a little position here, I think. We're told by the mainstream, oops, gotta get my bracket orders. We're told by the main, why is that not showing? Oh, shoot, hold on. Let me, let me get this, shoot. Symbol, I bet. Yeah, I'm good on the MES. What is this? MNQ M22. Oh, oh yeah. Okay, there we go. Um, what was I talking about? Yeah, there we go. We're told by the mainstream what to think and how to think about things. Um, in regards to diet, in regards to all kinds of things, and we sometimes hope. Let's look at this here. That the easy way, the way that doesn't really quite make sense, is hopefully attainable for success. And it's typically not how it works. Ooh, there's a seller up here. And I noticed them at 808. They might pop it like it's hot to the upside. Someone keeps buying against them. It's interesting. Good morning, you three. All right, that's a little espresso. I'm going to get quiet for a bit here. Let's see if we can get on the board here in a positive way. Oh. All right, on the board. All right, a third espresso cup downed. All right, let's get this treadmill back on. Anyway, been an okay day. Been an okay day. I spent a good portion of last night trading Globex into, well, past the European session open. I said I was going to sleep, and then I didn't. I came back. Oh, Andre, you're the man. Thank you very much. I ended up trading until 1:30 last night because the markets were playable, and I did not see anybody bullying the market in any kind of obvious way. You know, sometimes it seems like you can notice. Oh, let me see. This preset. I'm going too slow on the treadmill. Sometimes you notice in Globex that there's a dominant player or players, right? And if you're not supposed to be there, you're like, what the heck do you mean you're not supposed to be there? If you're entering positions, they go and buy and sell against you, right? And it's almost instantaneous. Your position size gets too big, and they just go hunt your stops. I've been on the losing end of that many a time in Globex. But last night, I could see what was going on. I don't know if I was just playing with them or whatever, and there was a few vicious moves, like vicious moves around here. Let's see. I'll show you guys where the vicious moves were last night in Globex, where they just bought and bought and bought. So, all right, this is gonna. So I was playing Nasdaq last night. This chart won't have the Globex or the European Open lines, so it's gonna be a little bit funky here. Whew, allergies are kicking my butt today. So it's right here. So they essentially, last night, my admission ticket, Andre. It's thank you. I really appreciate it. That's all I'm gonna say. Thank you very much. Right here in this area, I was up and playing this. I wish I could say I bought this low and flipped long. I did sell this area, and I sold it hard, and I resold it here, and I sold it hard, and I covered into here and here. It was still on Twitter, whatever, you guys can see. I covered into these areas here, but I never flipped long. I couldn't figure out. So this is the swing low, right? This is the swing low. Like it's a major breakout and then a pullback. Like so, this breakout bar is 5 minutes, right? And then over the next, oh, 45 minutes, it pulls back to, right, see this green, which is TD Ameritrade VWAP, right? And then it slowly grinds, right? And then we go sideways, and I sold it in here, and I helped sell it through this low. Just kept pushing. And I covered out just a little bit here, I mean, a tad, because I could see, well, okay, it went sideways. So I covered into the, here, let's see. I covered into these two bars a little bit, not the whole position, not even close. And then when it came up again, I laid on it here. I just went with who I thought were the dominant players. And I happened to be right. Okay. So then it rolled over, and I took profit into this area. I re-shorted. I was still short. And, you know, I was doing the theoretical average price in Sierra chart just to keep track of my position, right? So you can go in here in trading, and you can set the price to, instead of be like last in, first out, or first in, first out for average price of position. You can set it to theoretical, and theoretical will just show you for the profit you've locked in, it will show you your average price. So if let's say you're short here and you lock a bunch in here, it'll say your position is way up here or something, okay? And that's just nice to be able to keep track of, okay, I'm up so much, you know, where do I want to add to this position and trend, etc., right? So I'll turn that on when I know I want to build a position. I'm being patient and I'm playing. Hello, sir. Hello, Advenus. So anyway, I covered a little bit into here. It rallied all the way back up here, and my average was way up here somewhere. And so I added to it back in this breakdown zone, right? And then we ripped down. We came back up. I actually stopped out of some of it here. And I had a great ad because of this area here. You guys know how I do these BBWCs, right? Like this. Okay, so here's the breakdown bars. So I stopped back. The trailers got active down here. I took some profit at 50, right? You know me with my 50 lines. I'm almost always taking profit, right? So here's the 50. See that? So I took profit into this 50 line, which is this teal, but not all of it. And, you know, so now my average position is up here, something like that. And I'm up a bunch of points. So I stopped out some here. And then it just continued to roll over. Continued to roll over. Right? Just, I'm finding bearings here. Okay. So, anyway. And I got out. I'm thinking about what it was that I did. Okay, so this is the move I stopped out some, not this one. This is the European. I should have my lines on there. And then this is where I got out completely. All right, so I stopped out some back up here, got out completely here. The screenshots are on Twitter, so you can see. Anyway, this move right here, where they started buying. All right, you see, there's no tail really here, or very little. This was some incredible buying, and I noted right away on this candle here, not this one, that they were hitting every 10 lot and 20 and 15 lot and 5 lot that came on, and they would never let it drop back. They just kept buying and buying and buying, and the European Open is right here in this red bar. That's the European Open. That was funky. This was a tough point to trade. I got long through here and I scalped out right in here. Totally uncomfortable. I also got long right at settlement, and I got long underneath settlement, and I thought I was going to stop out when it came, and I was like, no, this is the typical. They're going to crush the souls of everybody buying settlement, but it's not going anywhere, and there's some big buyers. So they let it come down after they bought heavy here, both on the E-mini and the NASDAQ. And you can see these bars hold some volume, right? High volume. And I got out only at the top of this range. So my average was 67, and I got out 81 was my top fill in this zone. And then it comes all the way back up. It holds this resistive area, right? This breakdown structure, kind of BBWC-ish. And that made a good night for me. And I thought, well, I'm going to be done. But I stayed up just a little longer to sell this low right here at this red line. And again, I only covered into the top here. I covered from, I sold the bottom here, took the breakout trade, and I covered right into the top there. And my stop was like right in here. So pretty tight stop. A little bit better than 1R. And then it came all the way through here, and I was up, and I was like, oh, if they take it below this low right now, all these players that are still long buying settlement exactly, they're probably going to get liquidated, but I couldn't keep myself up. Right? I'm a little bit of a pit bull when I have a losing day like I did yesterday. So I couldn't keep myself up, so I was like, no, I'm just going to go to sleep. This might happen. And it did. I woke up and I was like, oh, son of a gun. I almost feel like, because this is, if you look here, right? I noticed it right here. It was 2 a.m. So this is 2:10 a.m. and I'm going to sleep. And that liquidation happened. But what's useful? What's up, On Point? What's up, Sopark? What's useful about me explaining all of this is that you guys see that this settlement, T+1, was major support. And when we came back to it, and we lost the volume node, you could play for the liquidation of these players short term, right? And we oscillated around it a little bit. And had I been up at 3 or 4 a.m., I probably would have been a little confused about this area, looking at like a neckline, left shoulder, head, the market starting to curl back up here, right? Something like that. I wouldn't have known what to do with this. I mean, BBWC is found everywhere, right? You find it here a little bit. You find it up here, right? Had we come back up here, you'd still probably get a little quick rejection. But had we come back up to this, after doing this, I would be less likely to short it for a little move back to settlement because of the overall structure. So I think this is actually fairly useful in terms of talking about this for Globex, because I know some of you guys trade some Globex. I know it's less popular because, well, look at the volume. But some of you European traders, I know you get active around Globex because look at the volume, right? So anyway, kind of an interesting night for me last night. Really enjoyed it. I enjoyed it because I won. Had I lost, I would have had a worse day. That's the truth. Whenever you lose in front of somebody, they say, you're over trading. Right? And then you take even more trades and you're a winner, they say, you're killing it. Hindsight is 20/20. What's up, appraiser guy? So, you know, this is trading. Bias bias is a B, right? Recency bias especially. Anyway, all right. What drawing tool did we just? No, okay, we're still in that. Okay, let's see if we can figure out what's happening here. I still like the flag. I still like the flag. Despite trading all the way back into the range, I still like this flag. It's very consolidative in nature, and we're still, I mean, yes, we're just trending down. I get it. But we have this trend line. And when you get this trend line that is so perfect, they often just snap. So we're we are here. Let me I'm still thinking. All right, this is the E mini up here. Here we go. Right, you see how this is coiling here? So high volume in the morning, right? As we can see from these green. High volume here. High volume up here. And now we're pulling back on low volume. And the volume's getting lower and lower and lower. And what tends to happen on days like today is we do something like, we're in this channel and we have one. You could count this maybe as a second and then a false breakout here. But generally we're in a channel and it's 10 a.m. So the algos are just smell food. My wife is making breakfast. The algos are just humming, right? Building a position for the sushi boys and girls, potentially, who are all going to lunch. They've turned their algos on, and all the retail traders are like, low volume, chop. Meanwhile, the algos just go to work and zip this market up and down and find stops, and these guys, they build a position. Then the sushi boys come in after lunch. This is setting up well for timing. They come in after lunch and they just buy it above a level. They spend some money. And so first level of resistance, if we break out, will definitely be this zone here. Second level, this high here, which corresponds to a big, essentially, volume ledge. And above that, there will just be stops. And this here is T plus 2, right? You see this up here? Top T plus, it's real small. T plus 2, 39, 71, 75. So anyway, this structure makes me lean a little bullish. And I know that we're in a bear market trending down. I get that. Just intraday. This is where I'm headed. This is how I lean. All right. Yesterday's settlement, kind of holding it. If we rotate down and break through settlement, we'll probably liquidate a bunch of longs. And then you have this open here, this opening low, right? This is the 6:30 a.m. bar here. And this is opening VWAP 30 seconds. If we break down here and push this low, the open is on the agenda probably. It also happens. So here's what's interesting. This is this volume profile here on the right side is Globex. You see how the opening 30 seconds of the RTH lines up exactly with this Globex here. You see that? Is that not interesting? So the European players are trapped. And they got trapped. And they may have gotten roasted here if they're short. So this is Globex volume profile. This teal line is opening 30 RTH, regular trading hours, opening 30-second VWAP. You see how it lines up, right? So we're getting a little bit of a picture, right? So big volume here from, this is the Globex. We're going to call it G up here for Globex. This profile, volume profile. Interesting, huh? So when you go look, excuse me, at a TPO chart, you'll find even some more interesting things to look at, right? So this shows that perspective, but now let's go look at the TPO chart as well. If I can find it here. I'm also looking at news right now, so just give me a little second here. All right, here we go. So there's that, you know, that's how we say different ways to skin a cat. Oh God, such a morbid way to view things. But look, this is the European session, that yellow line going to RTH. There's the volume, point of control Twitter. Shareholders will not be voting. I gotta look at that one. Hold on Musk deal today. Oh, disappointment. Sell it. Sell Twitter. It ain't happening immediately. Sell it. All right. Someone's disappointed today. All right. So maybe the NAS sees a little sell bar here. Let's see. Bears get their way again. Maybe. I don't know. So you see this line here? That's the European close into the RTH open. I'm sorry, did I say yellow? I meant green. And this green little triangle, that's the closing triangle. Anyway, this greenish, whatever, looking line extending is a volume point of control for the European session, right? So you see the same thing here, right? That the open starts just a little lower and then they get roasted. All they got to do is buy, because these traders from the European session, they're all out of position down here. So the cash session open guys, they buy, right? And where is there a little bit of resistance from Europe? Away from this big node, we just explode up. But there's a little resistance where there's leftover longs in the European session here. And so hence we get that. Now that's been building in real time, but it built here. Oh, sorry. Here, let me change the chart. So keep in mind, we're saying there was resistance from here on the way up here, right? So explosion from here. So all I got to do is buy up here, and then they're covering, which is propelling market into what? TPOC, essentially, right? Resistance. So it's that 50 line extension from the European open, which is way up here where they sold it. You see these rotations? They're just so beautiful. So they pushed it into the European open and sold the crap out of it, right? From up here. And then the 50 line is this light kind of pink looking line. There's the 100 line. That's the 100% extension of initial balance from that session open. So the 50 line matches up with the TPOC. And I'm saying they only had to push it up above this and they're all going to be covering. So now let's go look at the footprint. Can we see that that's what happened? Doing my best to bring some value. Okay. Right here. See that? That corresponds to what we were just looking at on the TPO. Yeah, Andre, I'm aware of FOMC minutes here in an hour. Well, 53 minutes. Sushi boys come back. FOMC minutes. Oh yeah, it's gonna be a party. All right. So I figured you guys would appreciate that explanation about the rotations about the European session, because a lot of people don't really in their trading, they don't really think about the rotations from the overnight, right? Some people do, but more traders don't, I think. Appreciate that, Andre. Um, and it's good to look at the rotations. And that's a reason why I have my TPO split out the way I do. All right, let's see if we can't get rid of some of these drawings here. Things are a little messy. Let's clean up the toys here. Da, 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 da. All right, there. I think we've cleaned up the toys. So we're all zoomed in here. All right. So the way our little minds work, right, is we say balance area, right? Here's the probe down. Balance area. Maybe you could take along with the stop underneath this low, and then the target would be up in this area. So, my brain is always just hunting for setups. Stop here. Entry right now. Exit here. All right. Let's reassess that. Now, I know the exit should be higher. I'm doing this for your guys' sake. All right. This is balance here. If you double balance, just visually, the exit should be here. But what do you have looking left? All right. We all want the markets to move so beautifully, right? In our, all right, we have this here, right? So what happened here in this area where the market broke down, came up, tested it, and then broke down some more? Here you have trapped longs. So if you're going to take a long here, looking for double balance of this, which is lower volume, see the volume here? It's lower than this. Should you have to contend with the longs that are trapped from here? Nod your head yes, you do have to contend with them. Hence, why? If you're taking a long from here, which I'm just giving you a hypothetical, right? If you're taking a long from here, and you're saying, I want to get the top of balance, you're now essentially, I like to say essentially, you're essentially contending with BBWC from up there, and potentially here, which is why this is the top of this range. You see how this market is working? The bottom of this range has become the very top of this range here. Okay, so it's very interesting to look at market structure and then to measure where you should put your profit targets. I think a lot of people like to say, here, let's get rid of some of this garbage here on the screens. I think what a lot of people like to do is just say, hey, there's some kind of flagging pattern here. Measured move is here to here. I'm going to buy it for a break like that. Right? Double the balance. I know it's breaking down. Double the balance and just target this. but you're right into resistance from higher volume than what has transacted here. So I'm sharing with you how and if this had low volume and this had much higher volume, then I would be much more inclined to take a long in here with the target even higher. It would get choppy, it'd oscillate probably, and then it would continue to break higher probably. Why? Because you had some accumulation here relative to this. But right now, there's overhead supply here, more volume. Okay? See this? When this is high volume, and you can see it's a high volume bar relative to even the whole day. It's not the highest, right? The volume has been decreasing, right, as we go into FOMC and markets just digest and whatever they do, right? People quit trading the open as much, right? Like me, I'm like, oh, I'm done. I'll go on YouTube, trade some micros. Back to the more successful way for me, right? Focusing on turning over my account in the morning, super focused, and then go talk about the market on YouTube, play less, right? So everyone's doing the same thing. All right. So you had this high volume bar. Look at what there's volume in this bar right here. Now let's go look at it. All right, we're just dissecting markets here. Look, it doesn't take a genius to see what's happening here. I mean, anybody with that can put arrows and lines on their chart can see, this is actually what's happening here. Resistance is forming here off of this level. And so think about this. Buyer here. It pops. If you're a buyer here, so it comes down, you're like, I'm not stepping in front of the train. Price oscillates back up, and you're a buyer now. Because you're like, well, now it's the turn of so someone went long, someone sold, we're now above that. The longs are maybe in control short term, right? So you get long here. Maybe your stop is, I don't know, some arbitrary thing based on your risk. Maybe it's below the lows. I don't know, right? Whatever it is. And you're targeting, say, I don't know, resistance right here, right? The downside of this candle. Okay, we look right. Okay, that lines up with, in real time, around the 10 SMA, sloping down. I'm taking a counter trend scalp here, right? Because of this volume node. So you're getting out before the low, which, support turn resistance before the 10 SMA. Okay, so we're just thinking about, we are thinking about how we may have structured this trade and how the price action after is affecting the bias or the movement of the market, right? The bias of traders. Okay, so you're into, maybe even here, right? You're like, this is first level. So, all right, there's first level. That's still 1.2 Rs. All right, we'll call it 1.2. 1.16 to here. And you're like, well, I'm long 2 contracts from this level. All right. The next level would be here. And then you get out here. So this is 2 Rs into this zone, right below the 10 SMA, right? You do the TYP method of exiting before the 10 SMA. So that's 2. The other one's 1.2. What's half that? 2, 1.2. What is that? 6? 1.6 Rs. It's a good trade, right? Okay, so we have identified a potential trade, a little bit of hindsight. It goes a little higher, then it rolls over. And then when it rolls over out of this, essentially, consolidation that is moving up. Now, if we have trend and consolidations move like this, what are they? They're bear flags, okay? If we have trend and consolidations go like this, what are they? These are potential. This is a potential loss of potential. I say just potential. That's it. Oh, I can't do anything here. Anyway, it's a potential loss of momentum for a reversal, right? Now stops are here. Why? Because when the markets move in a direction and then they keep trying to make new lows, but then they're not able to make new lows, what's happening is that the shorts are not getting compensated enough. And at some point, typically they give up. But in trend, if you get a bounce like this, right, you wash out the weak shorts because they cover up. So you wash out short-term weak players, and it gives players who are going with trend better re-entry. So if, let's say, their smart players are taking profit, they're also re-entering, they're bigger, and weak shorts are exiting the market tends to move in moves like this, and then it can sustain trend. But this is not a very good sustainable move. So my point is we had this come up, it's moving this direction like that, and then we break it. Foomp. We test it, and then we make a lower low, and then it's great for trend. Why? Because weak players get out, strong players absorb, build a position advantageously in the direction of the trend. And look what happens when this volume node here, right here, breaks. Straight down to what? T+1. Settlement, right? Highest volume. So is it a humongous settlement? Look on the heads up. Is it? No, it's not huge. It's not huge. It's 40th percentile. But it is enough because it's a high concentration of volume from the prior day at near the close, the last 30 seconds of trade. This is VWAP. This big orange line is settlement, or VWAP of the last 30 seconds of trading for the cash session. So it's 3 Eastern time, 3:59 and 30 seconds. So it's a super concentration of volumes. Hence, the market comes in, they buy above settlement, they say, if I'm short from here, I'm a smart player, I gotta cover out my short ahead of settlement because you never know, some big institution may want to defend settlement, may want to defend their basket of stocks over the broader market. The broader market may want to start buying again where they, sold or bought or did whatever they did in mass the day before. And so the market is, moving around this zone. So now we came back up. We just broke down through here. We're coming into FOMC. But my point, though, is once this came back up, you had a move to the upside. Once it came back down, which it resisted, there was plenty of opportunity on what? First touch of zone. There was opportunity to scalp long. And then when we came back around the second time, and now the shorts are in pain because all of this occurred, right? Where if you're short from this area, there's volume, so there's going to be some shorts here that are stuck. If you're not out here and you're waiting, if price comes back, what are you going to do? You're going to try to get out break even. What do people like me and other professional traders know? We know you're going to try to get out at break even, right? Yes, nod your head. We do. So we know the story of trap traders, right? That's what I'm trying to teach. Let's go get rid of some of these garbage drawings here. Okay, nice and clean again. I have my canvas to work with again. So you had the opportunity to scalp long, and then but only on the first touch of the area, right? So you got to think ahead. You got to think about the story that's unfolding. if you want to scalp well, and then think, all right, come up. This is obviously the breakdown zone from this consolidated region. So you want to be out of your scalp before that. If you're buying here with the stop underneath, all right, let's see. Can we demonstrate a good trade in hindsight? Of course we can. In hindsight, we can make the best trades ever. But let's try to do something realistic. I want to get long. Boy, okay. So here's let's structure the trade. Here's balance. Okay, here's balance. Here's double balance to here, right? Now, if you're like, I want to get long right into this volume node, you don't get it. And if you double balance, you don't get it. But if you get long just above the brightest point of the volume node, which represents a bar that is greater than 50% of the average bar for the session, you get it, right? So these moves kind of, what's the takeaway? These moves kind of favor the person who's willing to step out in front of the train. Now, if you're always stepping out in front of the train, what are you kind of told? You get your head lopped off, right? And how many times has that happened to you? You get your head just taken off. Like, I tried to step in front of the train and I got smacked. Here's my question. If you've been trying to do that over and over and over, are you doing it in a systematic way with a predefined plan? Entry and exit for good risk reward. And are you playing against trapped traders? Not just the market's going straight down, I'm going to try it. Let's say there's a big POC here or something, right? I'm going to try it POC and put a stop in. There's no structure over here, no nothing, right? In fact, it's all low volume, right? But the session POC, so let's just pretend there's nothing here, nothing here. The price has come way down, and this is what we see. No volume, no nothing. But because of earlier in the session, POC is here, right? Point of control. So you're one of these blind dummy traders that just buys POC all the time, right? And the last look left structure, the last look left structure here has no volume, right? So it's a short squeeze, but there's no trap traders here. The trap traders are up here, right? From volume, but there's nothing here. Is that a smart play? No. There's no, you're not playing against, like in this case, right? In this case, short term, as we curl back, you're playing against these traders. So you have a plan. It's the first touch of playing against these traders, so you have a plan. But this other scenario where price has gone all the way up here, and now it's ripping down, and POC's here, right? Maybe T plus 1 is here, right? But let's imagine T plus 1 is not here. But POC is here from early in the session, and you just blindly buy here. No specific trap traders from the very last time price moved from this region. You know what's going to happen? You're going to buy. You're like, fully scaled in. There's nothing here except structure and stops because of this bar. Stops are under here. See, this is a squeeze bar right here. See how this bar has no wick on the bottom? That's a poor structure bar, right? That's like having a poor low. Market loves to go repair bars like this. It's another secret of the market. Whenever you have a bar that forms on the 5-minute, that has no wick. Number one, it tells you you have aggressive buying off that open. But number two, there's no retracement. There's no oscillation of the market. You're like, well, that could just be a timing thing, Mike. You're right, it could be. Go back test it. Go take a look and look at all the 5-minute bars that squeeze. You know what happens when we get multiple bars that form like this and like this and like this that blow up and are met with volume? We get this, and we go take it out typically, and then the market makes a turn. Why? Shorts are trapped because of the buying, but it's weak longs underneath and stops under here for most of the same reasons as I'm talking about here. It really is interesting, right? That the markets give us this kind of structure even with candlesticks. But then you have the footprint, you got to look into it even more, right? So, pretty cool. But anyway, I think my rant is done. Hey, if you guys are appreciating the feed and the knowledge bombs here, please like the video. It helps the YouTube algorithm and me out quite a bit. It's what keeps me here sharing with you guys. A little interaction, right? I scratch your back, you scratch mine a little. So I do appreciate that, if you can. Yeah, Andre, I appreciate you appreciating me, my friend. You keep me people like you keep me coming back, honestly. All right, let's take a look here. What time is it? 10:30? 30 minutes until FOMC. Andre, you are correct, my friend. That explanation can make you a lot of money in the future. A lot of money. When I say a lot, I mean a shitload of money. Because that structure plays out in the market over and over and over and over and over. But people don't explain it like that. They don't explain the rotations. Right? They just say things like support and resistance. And you're like, wow, what do you mean support and resistance? Well, sometimes it's resistance, sometimes it's support. It's the distribution of volume and how we broke out of a level. These things matter. And if you can start thinking about what matters when, you'll understand the market more. And you'll be able to take higher probability setups. That's cool, Andre. I need to do something like that. Hey, Postman, I appreciate you very much. I need to do some kind of clips for a lot of this stuff because I think a whole mini series could be made on my longer live streams, the rants. Well, Andre, I appreciate that offer very, very much. But I would also feel very beholden to you in a I don't know. I'd feel very I have a difficult time with people saying thank you or doing something for me. Yeah, I know a lot of us struggle with that kind of thing, but I really do. I do struggle with it, which is why a lot of times I'll help people, but I don't really ask for anything. Because as soon as you give me something, I'm like, golly, I feel like I gotta do a whole lot for you. My wife's constantly reminding me, she's like, babe, you're helping them. Remember, you're helping them. And it only takes me a little, like someone just saying thank you and showing a little like you guys that drop $5 or $10 or whatever. I'm like, oh my gosh, like it kind of blows my mind. My wife is like, babe, what you're sharing is worth so much more than that. So it's it's why I gotta be careful with all this stuff because I like to help people. If I was made of time, everyone that I saw that was struggling or in trouble, I just help them. It's kind of part of my nature. Makes me feel good. Yeah, Andre, I know what I have to offer is valuable. I know that, um, but it's just so here's what it is, Andre. I'll just tell you a little background with me. I grew up in a religion that constantly made me feel, and around people that constantly made me feel guilty for things. So I always think that someone's gonna hold something over my head. That's just how I am. I bet you are, Andre. I love it. I absolutely love it. So anyway, that's the dynamic with me. I ain't perfect. I ain't perfect at all. I have my own demons and struggles because of how I grew up. I don't want to bash my dad too much, although I don't really like him, but he was abusive. So there's that stuff too, right? Where he would hang stuff over my head, and me and my brother both. My brother doesn't want anything to do with my dad. Me, I'm like a little more forgiving, a little more. He's getting old. Maybe he'll change a little bit. Um, but yeah, gosh, if you have kids, don't make the mistakes that your parents make. Try really, really hard to overcome um, the failings that you may inherit from how you grew up. Excuse me. Hmm. There we go. Am I getting suckered in? I could be. Top of the range. I think there's stops above, is what I think. Eric, yeah, sorry, man. I totally I really can't identify with that here. This is one of those go or no go trades. No, it needs to be a little higher here. Let's see. Right into here. What I like about this trade is that we have liquidity here too. So if they want to hunt it, right, they're going to hit that liquidity. Let's see. Did they move it? Did they move it on us? All right, let's see. Go or no go? All right, best breakouts either go or they don't. Go or no go. So we only got one. So it's probably a good breakout. Let's see. Go or no go? Tighten it up even more. It's go or no go. All right, we're out. Bummer. Right. All we're doing here is we're making higher lows right now, right? In this, and I'll get to the questions right now. We're making higher lows here, right? So against an area like this, short term, all we're looking for is, hey, price is demonstrating a little strength, but if we break this level and there's stops, we could do this in one fell swoop, but again, we have volume in here, right? And it's demonstrated by the volume profile here. So it could work out, but I have very little patience with these kind of breakout trades. I'll be honest. I much rather buy a pullback that I've established a some sort of reversion channel that we're doing this, right? And this is now a complex retracement. I'd much rather buy this, sell into this, sell into this and sell into that and be done. And my R's are better, right? I can get 3 or 4 R's on this kind of trade. But breakout trading, it's you got to read it right. It's moving. You got to read it right short term, and then this is resistance here, right where we're at. You got to read it right, and often your stop is not super advantageous. I was actually going to try to get a little short scalp in here, but I am too slow, my friends. I should have. So my Stream Deck is on a drawing screen rather than a trading screen. So I have to hit it, wait for it, get rid of this. Yeah, it's just a whole thing. Click on my DOM, maybe auto hotkey for the Stream Deck. Maybe it would be good if I had an auto hotkey button that put the NQ DOM in focus, and then all my buttons would immediately work right after, so I didn't have to move my mouse and click on my DOM. So I had an NQ focus key and an ES focus key for these DOMs. That would be better. What do you think? Anyway, if you guys are here, please like the video. Let's see. Appraiser guy says, do you look for passive players to be wrong or aggressive ones in your experiences? Which ones are more frequently being punished? You know what I'm going to say, Appraiser. I'll give a shout out to him. One Green Candle on Twitter. He's got a good feed. I've perused it a little bit. It depends on location, right? It's like real estate. Location, location, location. If the passives are buying after a big rip to the downside on higher time frame support, the passives are likely going to punish all of the late to the party players, right? But like I said on Twitter, there ain't nothing like pure deltas, MFers, right? What do I mean by pure deltas? You go buy or sell the direction of the herd, of the majority, right? Maybe not the herd in terms of retail, but go join the party. You know? Go join the flippin' party. You know, if you want to see price move in a direction, go hit it. You're like, but I'm a puny guy. I want the best fill possible. Well, you know what? You know why you hear with traders all the time that they say, the best, look in here, the best trades are the trades that work out immediately. It's because they're going in the right direction. And the ones that work out really well immediately are because you're trading with the right direction. And usually when you're trading with the right direction, those players who are moving the market are selling in the direction that they want price to go. Because aggression essentially moves markets. Even if the bid and the ask are some this was such a good short, and I'm kicking myself now for not taking it. And as I was talking just now, I was thinking to myself, on this wick, I am going to get short here on 60 NASDAQ, right? 860. And then this is real time. I thought, no, let's take out that little high there. If they take out the high, this is what I was thinking as I was talking. If they take out this high with just a little wick and it comes back in, then I'll short from up here. From up here at 65. So I talked myself out of a short right here from 60. I was thinking like, oh, I can get right in. Just go hit the bid real quick and get in. It would have been 60 to whatever. I could have got my 12, 15 points easy. Man, and almost immediately. Son of a gun. Anyway, going back to the market, right? The trades that work out because players are taking initiative, right? They're buying or selling in the direction that price is already going. There's momentum, right? Even if, and this is what I was about to say before I got distracted, even if they're levitating the book, what do I mean by that, right? You ever see the deltas just do crazy things? Like negative deltas and we rally 100 points, right? So we're moving up on passives. Well, that's a different scenario, right? And that most of the time is not the case. That happens on trend days when there's more buyers than sellers, right? So the price moves up on a passive bid, right? And then shorts just are forced to cover, and there's just more buyers than sellers, right? And so they just keep filling in. They just keep passively buying all day without any size displayed. And the size players are on the ask, but the volume's being hit on the bid. Why? Because, institutions are like, look, well, we don't want to make it obvious to Retail Street today that we just want to buy the crap out of this market. And we have the tools to just bid and buy and fill. And guess what? This size that is seemingly displayed on the ask, we could just run over that with the bid, and it's still less than what's hitting our bids. And so you get cumulative negative delta while price moves up. So that's levitating of the order book, right? And you say like that the argument is it's a counter argument against what I'm saying, right? There's nothing like MFing deltas, right? Pure delta, right? That doesn't happen very often. The vast majority of the time, you just want to go with whoever's willing to buy and sell aggressively. Not always. Again, context dependent, right? What's the larger level, right? So, yeah, anyway, rules to live by, I guess. Thanks, Kermit. Postman says, was your father a preacher? No, but he was extremely religious. Um, let's see. How about scaling in slowly on the missed NQ trade? No, I don't. Andre, um, I don't like to chase. Once these scalp trades are done, and I've missed the move, I feel like I've missed my A++ entry, and that gives me good risk reward. But any chasing, however, I may be right, but I'll probably be right with 0.5 Rs. So my stop probably needs to be in the same place. Could be tighter, but I'm now in the noise zone. No noise zone. I don't like to chase it as it pulls back, just because I think I'm I'm missing out on the trade. And I'm a big believer of pullbacks on first touches of areas or moves off first touches. That's where the players who are still trapped there are often waiting for a while. I'll be back. Need to use the restroom. Okay, I'm back. I've been on an hour now? Isn't that crazy? An hour and 15 minutes talking about markets. Anyway, here we go. 11 minutes until FOMC minutes. And do any of you guys have any ideas about this market? Let's let's get these volume nodes in visualizing in a way that make a little more sense. Hey, thanks, Andre. I appreciate that. You know what? This green is the wrong shade for this open and closed P&L thing. Oops, wrong one. About there, maybe. Now we're talking. Yep, much better. Much better. Now this needs to be slightly brighter, doesn't it? Yeah, I think so. Settings. Bump, 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 bump. Oh, that's weird. Yeah, that's better. Right? Just you could make this hue darker down here, but I think it looks worse darker. And when it's brighter, the black text pops a little more. Still a slightly, maybe, potentially slightly different hue than over here, but it's close enough. This one's the exact hue. But this has got more mint in it, I think. Has got more yellow in it. Anyway, afternoon, James. What is up, Chris Gardner? Let's see. Looking at the daily on ES, trying to get a crystal ball. I see 3 tops on the daily right at one place. If OMC runs things to the upside, a break of the 3 tops, maybe. My buddy Gabiozar, pointed out we have an H pattern setting up on the daily. Think that's likely. So Gabiozar, here I'll link you his Twitter. He's a professional trader that is an awesome trader, and I don't say that lightly. Of all the people I've connected with very few awesome traders, and he's an awesome trader. So just want to let you guys know. Hey, little nothing like pure deltas. Here they go. You see the pure deltas here? Red, 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 red. The scalpers go. Look, every 4 or 5 ticks, they go bing, hit the next ask. Bing, hit the next ask. Meanwhile, nothing like pure deltas to move the market. The scalpers still get out for their shekels. Hit the delta, right? Like you see that right here. I'm gonna put his Twitter handle with his post about the H pattern. So you see the positive delta. So pure delta, hit it. Pure delta, hit it. Pure delta, hit it. All right, they're all kind of spaced out. The pure deltas still win the day. Look. Anyway, 10:53. So let's be mindful of FOMC. Let me go find Gabriel's handle so you guys know what the heck I'm talking about? And you will see what I'm talking about. Oh, look at his charts. They're so beautiful. He knows exactly what's going on. Look at how he talks about it. Sellers defending. Buyer who absorbed needs to get paid. You see that? You see how he's talking about the market? Somebody who understands. Anyway, I love it so much. Oh, my friend. I have missed your I've perused Gabriel's Twitter for a long time. He's one of the few I actually go type in and I look at his stuff every few weeks. I'm like, oh, what is he saying? Oh, cool. I learned something. All right, here's the H pattern. You're going to see what the H pattern is. Stepan Urbaniak. Did I get that right? Close, maybe. Check it. These are the H patterns that Reznicek talks about. Yeah. All right. JT Carpenter says, when you place a trade, the red line is the entry, blue are the stops. Okay, I'll place a trade for you, my friend. I'm not going to get filled, but I'll place it. Oops. So that's a red line. Had no bracket order on it. Okay. So you see this? No, I don't want to be in a trade right now, short. Sorry, I'm going to move it way up. I don't want to be in a trade around FOMC. If we go straight up, I don't want to be short and just pissing away money. You know, I'm not going to really play too much. Okay, so I'm going to place a trade way up here. All right. So you see this. This would be the entry. See how it says L for limit order? You see this says TTS, like Tango Tango Sierra, right? Trail stop. Negative 20 points behind the entry. There is no profit taking order. Now, if we go, oops, I'm trying to click on the chart. If we go and we change this to another type, then we can get that. See that? 24-point stop, the limit order, one contract to sell, and the profit taker 36 points away. See that? So this is a full bracket. So upon filling, this OCO gets active. All right. So I'm typically entering, with this kind of order where, oops, I have a limit order and no take profit in the system. When this limit order fills, the trail stop gets activated. This trail stop is a type of order that stays static at this level once this parent order fills, and once I go about this much into profit down here, it'll go bink to here and then trail by about 8 or 10 points, maybe 12 points. And so it'll lock in about 1 R at about 1.3 Rs. So if this is 1 R at about here, it goes this. So this is filled. My entry's here, right? This arrow, right arrow. If price moves down, right, I'm in profit by whatever, how many points. And then it goes, so price moves to here. This is still way up here. Now when price moves about to here, this goes blink to here and trails, say, 12 points. And then the trails, the TTS, the trail stop gets activated. So if this moves down, the trail stop goes 12 points behind. And at this point, when this gets activated here, when it becomes active here, I can go to my DOM and move it higher to here, say, and then it'll trail this distance to here. If price is down here, it'll maintain that distance, right? So if price oscillates back up, it'll stay there. But if price moves down, it'll move down that distance, right? My price moves here, this will move down the same distance that I set. And that's helpful for letting a winner go. And it's also helpful if, let's say you're playing in a thin market with a little bit of size. All right, let's say you're doing 15 lots on the NASDAQ and it's a thin market and you've identified, man, these algos just, here, I'm going to get rid of this. I'm sorry. These algos are just hunting stops. Okay. If you get in like this, right, where the parent is here and these are the brackets. So here's the parent. Here's your stop. Here's your target, right? You're going short. And you're doing any kind of size and you scale in here. Now your stops are now scaled in proportion. They may just, if you did 15 NASDAQ contracts, more likely than not, if you're not supposed to be there, they'll go hunt it. If they see when these fill immediately within a tiny amount of time, all your orders come into the book. They can detect that. So where's your stop? 1R? Maybe. They'll go, it's worth it for them to try and go stop you out if it's a thin market and they're providing a lot of liquidity and you're not in RTH and you're in Globex and the market's only trading 100 contracts every 5 minutes or something on the NASDAQ or less. That happens. Here we go. Here comes the moves. Okay, I'm going to stop talking. Let's go. All right, let's get these things here. Got to get the news. Eric, yeah, I have videos that kind of show it. Is this where the gamblers come out, guys? Do you always want to play during this time? If you do, did they hunt stops? That's the question. If you do, you probably have a little bit of a gambling mentality. No, they didn't quite get them. Right? You see that? Let's put a line on it. Stops there. Did they get them? Oh, I guess they did. Almost. No, they didn't quite get them yet. Yeah, James, I have somebody asked me this yesterday. I have a video, I think it's number 7 in the Sierra Chart Tips and Tricks. So I show some sexy order types for breakouts and stuff. Admittedly, I did that video a long time ago, so I don't really remember what's in it. But I know I did some sexy order types. I think that's what I called it on stream yesterday. Go get those. Let's go hunt it. Let's go see what Mr. FOMC. Half percentage rate increases appropriate for next couple of meetings. Officials agree to expeditiously move policy to neutral. The market likes it. Get long, stay long, YOLO! Above T+2, E-mini starts to go bonkers. Let's see. Look at all the ask side liquidity on the E-mini. Look, hardly anything on the bid. Everything's on the ask. Look, hardly anything on the bid. Everything's on the ask. You see that? They're going to go smash bids on the ask, I think. We'll see. Nope, they hit the bid. Someone came in with size up there, 200 contracts. They went and smashed. So let's see. Let's see how the market reacts here to the MBO. Look at the 25 lots come in. 20 lots come in, right? Boom, they just go hit them immediately. See that? 20. Boom, they just hit them immediately. Building volume node here above highs. Let's see. Sorry, don't have the live stream up. I'm just looking at news. No, Andre, I don't think that there's well, there might be a huge, absolutely huge edge in great news feeds, but I've tried paying for them. I've tried different things. Squawks, Ran Squawk, thought they were pretty good. I've tried paying. I've tried Benzinga. I've tried some through Trader Workstation. You know, I was at one point I was doing enough volume and paying enough in commissions on Trader Workstation interactive brokers that they started giving me stuff for free. They're like, you can take this news service and this one. Mike, we're throwing it in. I was like, cool. So I'd connect the APIs, I'd do whatever I had to do. You know, they had the news service there and the TWS, which that's cool. But now I just use basic Twitter and whatever's in TOS. And I just want to catch major stuff. The news can be overwhelming. I'd rather trade on the technicals. When you're watching order flow and price, that's enough, man. To like all of a sudden look at the news in real time too and have like a crap load of sources all coming in. No, you mainly just want to catch the major market moving events. For me, that's my style. But again, I don't really trade penny stocks. I don't really trade. Oh, I don't know. These things that are on the news cycle, Reddit, subreddits, all of that. I just don't trade that stuff. So there's going to be someone else out there that knows. Oh, look at this 79 lot. Look at how they filled all above here. They're going to go take it out. Probably. 100 lots up here. Bing. Oh, they hit it. Wow. I think they're going to go take the 79 here, though. Bing. There you go. MBO's fun to watch during these times where you see big bet players coming out and taking positions here. Look, 665 here. They swept the market down. You see that? They swept it down. Let's see if they haven't moved. They're up 200 now. Look at that. They're sweeping. Market is running from their liquidity here. See that? Look at, they get to close all their shorts here as everyone panics. Panic out, close your shorts. They're still up there. Panic out. Someone said something the market didn't like. Look at all that liquidity sitting there. 25 lots, 100 lots. Who's short in the bottom? Are they long now? Is this it? Can you put... So here's what's interesting. If you start adding liquidity above down here, do they go hit it immediately? They start driving. There you go. See? You see the 50 lot paid down? The 50 lot went, I want to get in here. He paid down. What did they do? Immediately went and hit the 50 lot. It's no risk, no slippage. Just go market buy into the 50 lot. Who's going to be fastest? Essentially. See that? No slippage. So here's how you use the MBO. Hey, here's 50 again. The 665, oh, what is it? 695 is still sitting up there. See that? The 200 is still sitting there, 200 lots. Now, if you get close, it's a no slippage exit. Because if you're short, you're really flipping out here. See that? Bing. You can see it in the time in sales too, right? My time in sales is three times the vertical length as what you guys are seeing in the stream, right? You guys are seeing up to here. I have three lengths more than that, so I can kind of keep track of it. But tough if your time in sales is vertically too short. Yeah, MBO shows individual limit orders, Kimster. Yeah, Kermit, I do the same. Yeah, okay. I liked Trade the News. Okay, cool. I'll look them up. Appreciate that. Hey, if you guys are on channel, please just like the video. It really helps the YouTube algorithm. Keeps us all here together. So I put the video up. If you guys can just like, that's great. Um, Crazy moves on FOMC, huh? Just crazy. Haven't even taken any trades really. Let's see if we can see the nodes here. Hey, look at that. 151 chasing. See that? See the 151 just chased? So they came in here and then they moved it back all the way up to front of book. Right? So someone's chasing is someone's exit. Guaranteed exit. It's really wonderful to see the MBO, right? Market by order. These are the large size limit order book here on MBO is what that is. And I have it set on the E-mini to show any limit order 10 or larger. On the NASDAQ, it's 5 or larger. So you see how we see these 10s, 20s, but there's undoubtedly lots much smaller than 10. This gets really full and it gets really big if you show anything under 10. So that's why I look at 10. You see that? 137 there. Some filled. Boom! They hit the whole thing. How do you know they hit the whole thing, Mike? Well, look at the deltas. You see how look at how it was all positive delta. It turned very big and positive right there in real time. Look, order flow. If we're defining order flow the way that we want to define it. We saw the order come into the market, right? And then this visual representation of ask delta showed us in real time that this order flowed into that level, or people flowed in and bought that. The tape's moving fast. You could see it through the tape, multiple tape too, but you could also see it through your footprint in real time. So, hey, 25 sitting there. Look, a little above. Maybe is it close? I may be. Let's see if we're having issues again. I thought I fixed the issues. Let's see. No, the lag's not too bad. Let's see. Big ticks. See the ticks down here? Right here. Ah, it's great. I have stuff over that screen, but you guys can't see it. That's fantastic. Yeah, Sierra chart is like using that core like nobody's business. Okay. It's in superpower mode here. Let's see. Um, oh, you guys could see that one. That's interesting. All right. Sierra chart at 6% right now. Yeah, OBS is only at 3. Yeah, it's just probably just Denali. Whatever. It's not too bad. It ain't terrible, terrible. I think it's just volatility. Do you have a video with MBO settings? I mean, the tape. Yeah, it's on let's see. Sierra chart tips and tricks. And you know all those tips and tricks in that folder, they're all they're pretty well defined in the titles. So I don't know which one it is, but there is a video in there where I show you how to set up tape, um, volume filtering, size filtering in Sierra chart. I think I even maybe talk about the combined tape, right, where the tape is recombined according to exchange combined fills. It's Sierra chart's version of essentially what a lot of platforms already do, which is that combined tape. Like, if you look at, by the way, NASDAQ right off of its settlement, right, to the tick. Isn't that interesting? Right down here. Hindsight, right? But look at that. Settlement to the tick on the NASDAQ. That's, ooh, this market looks like it wants to go. Yeah, Gara, it's some sort of exchange combined setting in the time and sales, but it's the equivalent of what, like, for example, Trading Technologies already uses for their time and sales, and a lot of platforms already combine it into the exchange reported summary. That's what it's called. Sierra chart just doesn't do it that way out of box, but most of the other ones do. So if your tape is looking different than another data provider or platform, that's probably the reason. Just turn that on. Or you can just filter them out, right? Filter out all your 10 or 20 or 50 or 100 lots, put them into a separate time and sales. Yeah, we're going. We are going. Pop it like it's hot. 3,000 tick. You see the ticks there? Right? Going. Going. It's about to be gone. Here come the stops. Fed officials discuss possibility of restrictive policy to fight inflation. That's the new, the possibility of. Anyway, market's going up. That's all we know. Don't fight the tape. Like, is it going up, Mike? See it getting absorbed. Yeah, I see that too. Short term. Noise, I tell ya. But yeah, a little bit. So the players have position. So, right, this is the position on the NASDAQ here. They're taking profit. If they can hold this market up and take profit here, then they can keep buying. If they were doing average theoretical price and they're taking profit here, essentially, if they're taking a bunch of profit here and they're staying long, Their average price is way, way, way down here now. Think about that. Turn that theoretical, put it on sim, put the theoretical average price on, and buy a bunch of, I don't know, short a bunch of contracts here, and then cover some in here. And then watch your theoretical price go higher and higher and higher. And then now think, it's the opposite's happening here. They're pretty happy to absorb and then buy back because their average is somewhere down here potentially. So that's what you do, right? You buy on a position if you're big, and then you scale out some, and now your break even is somewhere way down here. You're like, you make it sound so easy, like you knew the future. I'm not saying I knew what was going to happen at all. No freaking idea. I'm just saying, if you're right and you're doing that, that's the fact of life now. So while you're all worried about this absorption up here, maybe they're buying back because this is their original position. And they're happy to buy lower and trap some of you and whoosh. But right now, this market is, we had the trap, we had the buyers. Let's see if this edge they defend here, right here. All right, let's see what happens. Right? Oops. Here. All right, let's just see. And then above here, let's see if they buy it aggressively. Like, this is why the second time sometimes it goes up. It goes right up through it. Like nobody's business. It's because they're done selling, guys. And now they're just buying against the dummies. That's why markets oscillate against the shorts. Then it makes new highs. Then you take some more profit. And then the shorts get stopped out. And their algos work overtime. As you stop out, the algos catch them. Watch. 3,000 tick. Uh-oh. Not working in your favor if you're short. Now get me the hell out. Yeah, that's what I'm saying. I use both, James. You see them? Nice. Oh, here. Nicey tick. Right? Oh, you can't see that, can you? Oh, that's weird. Anyway, it's down here. You can't actually see the marker doing its thing. Because that's a detached from Sierra chart window. That's why. Anyway, but it's down here. And then the nice EMX tick is here. So this one, so this here, the tick that has the bright, that's going off right now with the red background, it's above 2,000, is actually this one down here. That's the one that gives me this signal. I have the nice E tick up there. Sierra chart updates their tick in real time. They don't filter out the nice E tick as much as, say, TOS or TradeStation, right? They have filters. Sierra chart just calculates in real time all of those ticks quickly. So you get a more accurate representation of the NICE ticks and the NICE NQ Amex ticks, but it is different. And it's different because they do more calculations per second than these other guys do. So that's why it doesn't line up with your TOS. So if you want it to line up with TOS, Well, ooh, cool. Yay! My sister-in-law is coming over. She's getting married this weekend. She wants to come visit. I'm happy. The bride is going to come visit. She's one of my favorites. She's awesome. Our kid's godparent. So excited to see her. I'm pumped. Anyway, that's why I like using the NQ Nice AMX tickets. Is it's taking the Nasdaq, the New York Stock Exchange, and the American Exchange, and it's taking all the things that are ticking up and ticking down in real time across all three exchanges, rather than just the New York Stock Exchange. So you get a little bit more of a broad market um, indicator. You're using Zip's text to display, James? Oh, that's cool. Zip! Oh, he's probably not watching. But Zip, if you are watching and you understand me and this text translator is working well, email me, my man. It's been a week since you last emailed me. I miss our conversations. Oh, that's cool, James. Right on. All right. So this structure looks like upside. How high, how far is this thing going to go right now? That's the question. It's just looks really obvious to me that it's going up. Both of them. We have T plus 2 above though, so. Notice we're just under T plus 2, guys. Notice I'm not taking a trade. Why? T plus 2 is equity settlements. First 2 days ago. So the broad indexes represent, in a very broad sense, the cash settlement for shares bought 2 days ago. So with equities, T plus, sorry, news. Hold on. Uh, now they're talking about inflation topping. Yeah, whatever. Anyway. Hey. Camonta! If you're on YouTube, you probably are. He's telling me about settlement to the tick on the NASDAQ. You're late, my friend. I already pointed it out, but thank you very much. We'll put a heart sign on it anyway. And we'll say beauty. Alright, there you go. Camonta. Alright. Alright, back to it. Ah, here's some nice delta. Yeah. Now we're going through T plus 2. T plus 2 on the NAS. Another 70 points up. Somewhere up yonder. Right there. Pumping through now on the E-mini. They're taking profit. Look at that. On the NAS, they are taking profit. Someone's also buying. On the E-mini, are they, and I mean they, are there a lot of market participants taking profit? Nope, they're taking lots more profit on the NASDAQ here than they are the E-mini. Someone's hedging. So you see, they're selling the NAS, not heavily selling the E-mini. It's kind of interesting. Look at all you T plus T2 sellers up here. Pure delta. Go hit it. Go hit those bids. Yeah, I'm just going to wait for the rotations. But anyway, T plus 2, back to that explanation that we were maybe 25% through. T plus 2 also, it's settlement on the equity futures indexes from 2 days ago, but because equity futures indexes are an index, and the index represents the underlyings, and the underlyings for the E-mini, or ES, is the S&P 500, and the underlyings are stocks, then the settlement for the E-mini is a big old proxy for the highest volume of the underlying for stocks. What I mean by proxy, it's like in place of. So it's kind of like a big average for all the underlyings. And so if the underlyings have an average price near the close, near settlement for the E-mini at that price, then all those underlyings with the hundreds of billions of dollars flowing in and out of them and their options and everything like that are all going to be represented by this simple line, oversimplified, that we put on called T plus 2 on the E-mini and on the NASDAQ. And the E-mini and the NASDAQ, mainly the E-mini, tend to have the highest, they have the highest volume concentration of the whole day at that line. And that's because at that time, the equity complex, or all the underlyings for the S&P 500 and all these, basically all the stocks that are traded out there are trading their highest volumes. And so the E-minis can represent all kinds of activity, right? It can represent directional bias at T plus 2, it can represent hedging activity at T plus 2, which is why around that area you see liquidation breaks. And so there's a whole theory, or many theories, about how you play moves into and out of T plus 2. And you're like, oh, Mike, please tell me more. Well, that will take me the rest of the day to talk about the complexities of that. But you can start to consider the margin funds that are now available or not after what? The cash, the equity complexes cash settle 2 days after purchase. T plus 2, that's what that refers to, which is why I tie it into the equity settlements. So the cash settlements of the underlyings occur 2 days after. Now, if you're margined up to the hilt and all those shares cash settle and you're below water, what do you got to do? What are you likely to do? Sell futures! If you're long, you bought equities, but the index is way underneath where you bought your basket full of stocks, again, which is represented by the SPX, which is futures are the index futures of the SPX. The SPX is an index of all the underlyings. So it's representing a basket full of stocks. So if you're underwater, now you're cash settled, and you're like, oh shoot, we have margin that's based on this. And your margin rates are going up because the Fed is raising interest rates, and you continually are under T plus 2. What do you got to keep doing? To get delta neutral, you got to sell around T plus 2. You see why this settlement is more than just, it's more than just a line on a chart that represents high volume. It represents so much more about the whole underlyings, the underpinnings, the the guts of the whole stock market. That's why I keep pleading with people. Oh, read about T plus 2. I've given people links on Twitter and posted them. Go read about it so you understand. So it's not just some crazy guy on the internet talking about it. Go read it from the SEC. Google SEC T plus 2 changes. You're going to find a paper. They're going to try to shorten it to T plus 1 for cash settlement. They're not going to do it until potentially 2024. Well, that impact how you trade in 2024? Nod your head. Yes, 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 yes. Go Google it. Go look it up. Stay on top of these things. Then you have an edge in the market where nobody else is talking about it or thinking about it. Right? This is why us nerds, we look up the stupid things about icebergs, synthetics versus natives on the CME, and we read stupid stuff about price protection limit. Why? Because you can gain an edge from understanding all this stuff. So go look it up with T plus 2. Do your due diligence. You think I've just explained anything in any amount of depth? No. Have I told you how prices move? First time, second time, third time? What price looks like when they're winning? No. I want you guys to go read about it, and then let's have a conversation later. Nobody will pay me enough to talk about this stuff on stream to 55 people who just think that this is not very valuable information. It's extraordinarily valuable information. So I'm just saying, go read about it, then we'll have a conversation. You need to read about it, right? It's like human anatomy. I could tell you about all the bones in the human body, but it isn't really going to make sense until you have a skeleton out and I'm pointing them out. Oh, this is your whatever. Right? Your scapula, or this is your gosh, I took human anatomy and I'm trying to think of a I don't know. I'm trying to think of some crest, right? Or some really specific part of the bone that maybe people don't, some arch or something that people don't know. But anyway, it's not going to make sense until you visualize it and have a little bit better of an understanding of the whole structure of what the plumbing, if you will, of what goes into T plus 2. Like, I've given you a broad overview, but go read about it. Anyway, enough of this. R. Lacey. Yeah, I've been preaching it non-stop. I've been preaching about T plus 2 non-stop over years on Twitter. Years and years and years. But, and I've said, it's like really, really important, and it's one of those levels that can really help you with bias, that can really help you understand huge moves. And people just are like, I don't understand it. Maybe you could talk about it. Like, well, why don't you go read about it? And then I get back to them, or they get back to me. I'm like, hey, yo, did you ever read about it? And they're like, oh, no, I started it, but it kind of put me to sleep and made my head hurt. Yeah, welcome to deep learning. Deep learning, man. This is on Twitter. My pinned tweet is something to the effect of, here, I'll just read it a little bit. What? It's story time on the TYP feed. I'm going to find it. It's the main thread. Number 9, the solution is usually directed practice. If these guys aimlessly wander, no coaching, so I'm talking about basketball players who make it to the NBA, whether it be self or other directed, they usually just cannot adapt to the speed of the game. Trading is no different. If you're struggling with synthesizing information or understanding something, don't continue trying to evaluate the market using a multitude of methods. Stick with one or two, and when you find they give you the same signal, take the bet with defined risk. Don't be the person in the backseat of a car who can tell others how to drive but doesn't actually drive. We humans learn best by doing. So get skin in the game, play small, but make sure when you play wrong, you get stung a little bit. Right? Once you learn how to execute, get on a real account. That's what my suggestion there. And at the same time, have a working hypothesis that allows you to test against. My 2 cents. Number 13, to add to this, I've had traders who've asked me to, quote, teach me everything you know, Mike. I've indulged some of them. Usually about 2 to 3 weeks in, with, honestly, about 3 to 5 months of non-stop information left. They exclaim, I'm overwhelmed. It's too much information. Number 14, I've said the same things to people over the years. There are no shortcuts with trading. You have to layer your knowledge and be able to synthesize it quickly. One of the ways you do this is by repeatedly, this is the part about T plus 2, if you're not willing to do it, this is who I'm talking to you. One of the ways you do this is by repeatedly I'm just reading from my pinned tweet on Twitter, is by repeatedly making your brain hurt while you try to learn things that you, number 15, aren't understanding well. There's no shortcut. If you don't understand why deltas work well, then read something technical on it. If it goes over your head, read it again. Now, substitute deltas with T plus 2, whatever. If it goes over your head, read it again more slowly until your brain wants to explode. Then sleep on it and try again. Rinse, repeat. Mark McLovin asks, is the new trader you? I say, what do you think? Smile, sweat smile. And then I say, some days it feels like it. Yes, yesterday felt like it for me. I had a losing day on stream yesterday, so I felt like the new trader yesterday. But anyway, I'm appealing to you guys to get into the nitty gritty, right? That's what this is about. Trading is not about being the person in the class that sits in the back on their phone the whole time and is like, day of the test, hey, do you know the answer to this over here? And you're cramming 5 minutes before the test. If you're that person, you will fail in trading. Look at this guy spreading nonsense and negativity. No, this is hope. I'm telling you how to make it work. Trading is about studying your tail off. It's not about finding the path of least resistance and not putting work in. Put work in. Study, read, then come back tomorrow, look at the markets with fresh eyes, with a totally new perspective, and look at the way price moves around these predefined, predetermined levels, and try to understand. You will be amazed, right? It's like, how many of you guys have taken, any kind of course that illuminated something that was so mundane in your life, typically, that before that course, you're like, I didn't understand anything. Then once you took the course and understood, you started looking at that thing, it became so interesting to you. You were like, I now understand how this works. Now I feel like I'm not just wandering around, aimlessly kicking dirt, and getting my ass handed to me in the markets every day? Well, a little bit of study, a lot of study, but a little bit of study every day will allow you to look at the markets with fresh eyes. And this is a hopeful message. It really is. It may sound like doom and gloom, but I'm trying to give you guys hope. Because there's so much information out there. And you're like, what? What do I focus on, right? Who's right? Who's wrong? I'm saying pick up the book and read. You're like, what? Which book? Start. If you're a futures trader, go learn about T+2. Start there, right? Think about the rotations of the market. Think of yourself. So as you read about T+2, think of yourself like a big hedge fund, right? You're this big, fat, Ray Dalio-like hedge fund, and you're like, I have a fundamental thesis about stocks. Now, this isn't important, the fundamentals, right? But it's just a story, right? I have a fundamental thesis about the stock market and where it's going. And I'm going to move these funds into this market. And I'm going to lever up a bit, okay? Meaning I'm going to use margin. Because I want them big gains, right? So you're going to buy a basket full of stocks, a whole bunch of stocks. Different ones. You're going to buy blue chips. You're going to buy some major growth that are kicked in the dirt that your team has said is good and blah, 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 blah. Now you're margined 150%. And this big basket full of stocks is kind of represented by the move of the S&P 500. It's not exact because maybe you're heavy on Tesla because Elon Musk, I don't know, you like pedophiles. No, I don't know. I don't know that he is. That was an inappropriate comment. Some of you are Elon Musk fans, but didn't he have some allegation? But anyway, all right, we got to keep it spicy. You guys still awake? Hey, Arlexi, I appreciate that. Just making sure you guys are still awake. I haven't seen very many comments. Let me just throw a risque comment in and see if you guys are sleeping or if I'm talking to myself. Appreciate you, R. Lacey. So, again, going back, you're Ray Dalio, and maybe you're concentrated with some certain stocks. So it's not a perfect, the S&P 500 is not a perfect representation of what you hold. But it's pretty darn close, right? And so you have all the Giras and the R. Lacey's and the Andres, all your little minions who went out and bought you stocks. They bought you, I don't know, tens of thousands of stocks near the close. Why do you buy near the close? Well, because you want to wait until the technicals align. Oh, we're closing on highs. We're not going to trade in all the noise during the day. And there's lots of liquidity at the close. So you can transact with hardly any slippage, right? And you're doing it in dark pools too, but we won't get into dark pools today. So for simplicity's sake, you're transacting near the close. So you went out and you bought all these stocks. And then overnight, Trump's reelected. We get the Walking Dead Biden, which again, this is not. I'm not trying to insult anyone who's a liberal or the other, right? But Trump's reelected, and Trump says overnight, China's the enemy, and the futures drop all night. We're like, no, we're getting into a war with China, with the Fed raising rates and inflation. No, this is not what we want. So we all sell futures. All of us futures traders are like, lay on it, short it. We all short it all night. Now, you're the Gira, you're the Andre, the R. Lacey, the Kimsters. We come to the office tomorrow and we're like, son of a gun. What did we need to do 2 days later when all those equities that you can rewind the stream, by the way, Joseph. You can rewind it. What do you need to do? All those equities that you bought, do you sell the equities? Do you sell them all? Now they're cash settling. You're on 150% margin. The market's dropped 2%. So your 2% is really like 3 or 4%. You're paying some interest to be margined, to be leveraged. What do you got to do? The cheap futures, you got to go sell them. You exacerbate it. So you have, overnight, you have algos that are automatically calculating your deltas as a billion-dollar hedge fund. You, Ray Dalio, or you, whoever. So it's selling, but then you have to make a discretionary determination the next day, like, Trump said, what about China? Oh, no. What do we do? All right. T+2 represents about where you're long from. And that's a rolling T+2 because maybe you're buying and selling every day. And now we're way under T+2 because we gapped down. So what do you got to do? The market's continuing to trend down, right? Gap and go to the downside. What do you do? Well, guys, support, technical support, is under this left shoulder of an inverted head and shoulders. And our deltas get pretty out of hand there. And futures are cheap because they're highly levered, but it's going to get us close to delta neutral. We break that, we got to make a decision. You sell. When you sell, some smart person on Wall Street who didn't make that same bet, that maybe knows Trump personally, and that he was going to say that, goes, I'm connected. I'm connected to the Donald. Guess what? We know Dalio's firm has got to deleverage under here. It's going to get hot and heavy under this technical level. And we have an idea that they're going to sell at any cost. So guess what? Breaks that level. The volume goes bananas. And everyone's like, inverted head and shoulder, failure, right? New lows, someone's buying. It's high volume, right? And it's moving. But someone's on the other end of that trade. And all of us rookie traders, all of us retail street are going, new lows. Breakout. And then 50% of the breakouts fail. And we're like, what the heck is going on? And it whoosh, it reverses and rips the other way. Now Dalio's net, he's delta neutral because he owns the underlying. Now, when it goes all the way back to the top, because these smart traders have bought the weakness, what do they got to do? What does Dalio got to do when it gets back to the top of support resistance? Hey, if it breaks resistance up here, son of a gun. We were right. It's a false breakout. Let's cover this short and start to get net delta, not delta neutral anymore. Let's get long now again. So we break the top of the range. Guess what these smart guys are doing? All the breakout traders. Guess what? I bought the lows. I get to sell new highs. And I'll hold some. So anyway, this is the idea, right? Of trap traders. Now you're incorporating the exact same idea that I talk about every day with node to node, on footprints, looking at market structure, who's getting hurt where. Now you're thinking even bigger picture around T plus 2, and you're like, well, this shit is now just way more complicated. Way more complicated. My brain is exploding. That's fine. That's fine. There's people that are a gazillion times smarter than all of us playing this game. And I'm just trying to give you big picture ish. You know, ish is my word for SHIT. I'm trying to give you big picture ish so that you have an idea of how this game is played with trapped traders. It's played on big levels and on small levels, and this is why you get false breakouts to the upside and false breakouts to the downside. And these are typically the opportunities that we're looking for big movement. So anyway, and end rant. Okay, Joseph. That was a good one. What are we talking about? He got me. Oh boy. Anyway, up we go. Is this so is this a diamond continuation, guys? Anybody familiar with diamonds? Diamond, right? Bing bing. Bing 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 bing. Bing 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 bing. Bing bing. Look, diamond. Called a diamond continuation. They work on they're also reversals. So the diamond continuation, this is in talked about in Technical Analysis of Stock Trends, which has 11 or 12 editions. The Bible of Classical Charting Techniques, by the way. Love that book. The diamond either breaks up with the measured move from here to here, up to here, or the diamond breaks down. One of the less talked about patterns in classical charting. You go look at Boeing into 2020 on the weekly chart, and you'll see a diamond. It was a diamond reversal, and the measured move on that was hit beautifully. Hey Brian, thank you. Yeah, the family is doing well. We're gonna be traveling Friday morning, so today and tomorrow will be my last 2 days in the market this week, and then Monday we have Memorial Day, so it'll be a nice long 3-day weekend, 4-day weekend for me, but for you guys 3 days. I don't know that futures are going to open Sunday night. They may, but I won't be around. So this is it for me. Let's go. Measured move. Here, let's put the measured move indicator on. Okay, here to here, here. So what is that? Plus 12.25. Okay, from here to here. Plus 12.25. Right there. All right, there's your measured move. Right there. Doesn't mean that we don't go higher. It's your measured move from a diamond, a diamond. Now, if you guys know me, and you should by this point, if I bought some pattern like this, I never hold for the full measured move. You know why? Because I like getting out into the strength. And I like to get out, so this is more stuff that can make you money in the future. If I put a stop here and I have an entry right in the middle, I get out into 1R, and I get out into almost always into 2R, and then I hold some for the full measured move, and I'm out. And you know why I do that? Because if half of all breakouts fail, where do they fail? They usually fail before they make new highs. You see how 1R is before new highs? So if more, or if half of breakouts fail, let's do some logical deduction here. If half of all breakouts fail, right, that's just a figure thrown about on Twitter, in finance. If half of all breakouts fail, then it stands that the failures are failures to reach new highs. But certainly, more markets break out and hit some target. Therefore, even if you take many breakouts, if you can set up your trade because you're taking profit where the breakout fails, you can win more than 50% of the time. Now think about that. Isn't that interesting? Now most of us are just taught, take the breakout with good risk reward, like 3 or 4 R's, right? And if you're right, say 35% of the time on 4 R's, you make money on balance. But I would prefer to be having a smoother equity curve with a higher probability of success and still being able to play for 2 R's, which is what? 2 R's is what? Oops. Oh, don't want to touch this daily trend line. All right, let's see. There it is. Oh, no. Get rid of that. Bing. Here, where's 2R? 2R is here. All right, so we're out. Well, there's 1R. There's about 2R. Here's 3R. So if we took off 1R, we've now locked in our 1R trade. Can't have a loser. You lock in your 2R. You just locked in 3R. You can be all out for a 3R winner. Now, is it 3R overall, or is it you took at 1R and 2R and 3R? So your real overall trade, if you took off in 3, is 2R. Yeah. But at least half the time when it fails up at 1R, you have a break-even trade. You see how that skews your expectancy a lot? Hardly anybody teaches this stuff. Guys, this can make or break your trading. Anyway. Yes, Shane. 2R is 2-to-1 risk reward. It's being demonstrated by this here, right? Where, look, maybe you guys can't see it very well. This is your stop down here. This is your entry. This is your take profit. This green line is denoted that by the fact that your bias is long. So stop, entry, take profit. So it tells you here, entry, 38.92, stop, 38.79, target, 39.89, RR, risk reward, 2.08. So I have this set up in Sierra chart so that I can quickly look at these things all the time. And so I'm simply telling you that if you went long here and you took off 1R and your stop is 1R here, right, and you've identified this diamond, you think it's continuation, we're not selling off at T plus 2, then you can take off at 1R, take off at 2R, and take off at 3R for a 2R win. Because what? If you take off at 1R, that's 1R on your position. Let's say it's 3 contracts. So you're plus 3 points. Then you take off at 2R, plus 6 points. Then you take off at 9R, or at 9 points, right? That's 3R, because your stop is 3 points. So what's the average of 6, or 3, 6, and 9? It's the middle, right? 6. 6 points. So your original stop is 3 points. Your average take profit is 6 points. So your winner is twice as big as your loser. But what I'm getting at is if you take off, there's different ways to do it. So you can take off a third and then move your stop up tighter in case you have a fail breakout and it comes back in. In most cases, if the breakout comes up here, it comes all the way back in, it's going to chop around, so you want to be stopped out anyway. So you can move your stop up tighter, right? To a little below break even to have a break even trade overall, right? And then at 2R, right? Maybe at 2R, you move your stop to break even. Now, if your stop's at break even, you have a 1R trade when you stop out. So my point is, if you take profits and scale out, where everybody else is teaching you, go for the whole thing, 3 or 4 R's. Well, guess what? If half the time breakouts fail, and then of that, only 90% go 4 R's, your probability of success for 4 R's is going to be very low. It's going to be like 20 to 30%. And then you're going to have to find the very best breakouts only on higher time frames and establish your criteria. Now, it's even more difficult because you're trading less. So like, instead of having a bunch of different setups, you're waiting around for that 4R trade that's A++ and got all these correlations, and it's a good setup on a high time frame, it's a good setup on a low time, it's a good setup on a medium time frame, and you're trading less. So you're sitting on your hands most of the time. And then when you do trade it, you only have like a 20 to 30% chance of success. So I'm suggesting you can take more trades at 1R, be more engaged with the market, have more setups at your, I don't know, you can have more potential setups and you just need to be able to learn to scale out into places where big money typically takes profit. So you need to learn to think, excuse me, you need to learn to think like the wolf and not the sheep. That's all. Take profit when they're not. Take profit when you think the big boys and girls are taking profit. Because if you look at a footprint, you can see where they're taking profit. They took profit. Someone was buying, someone was selling. So, you know, if you got long here, right? Or you're wrong with shorts, you're probably covering above new highs. If you're covering above new highs, they're probably taking profit into those new highs, right? A bar closing. So here's another thing, right? It's price action. A bar closing on its highs. I know it's been a bit of a fire hose for you guys today, so that could be a little overwhelming. But a new bar closing on highs, getting everybody bullish. So what are they going to do every time? They are going to de-risk their position into breakout traders. That's why this bar gets us there. This bar's fat. A lot of people would argue, well, this is them positioning for this. No, it's a little of both. It's mainly them de-risking here. And if they can de-risk and the market still holds up, now they can buy for a new leg. So they're trying to determine whether the shorts are on the fence. So they are. They're on the fence. Shorts are completely pounded. Gabriel knew. H pattern, right? Playing out. Anyway, I'm getting tired. I'm burning out here. I'm a getting tired. All right, let's see. Harlem Trades 2 on Twitter is asking, what is settlement? What's settlement? Because Camonta on Twitter says, today's settlement points out this pullback onto settlement in the NASDAQ. So Harlem Trades 2 says, what's settlement? Get this all the time. All the time. Futures traders, no idea what settlement is. T plus 2 on the NAS. Right above. Right above. Notice the E-menus. Got a different structure. What do you guys make of that? Here, let's get rid of some of this garbage. Bing, bing, bing. All right, there we go. I think are we cleaned up now? Hey, look at that. More weekend video stuff here, guys. Check it out. You're like, what are you talking about, dude? All this from my weekend video. Uh-oh, am I giving out levels in real time now? Anyway, let's put this like this. Put this like this. Spacebar it up. Oh, I'm tired. Yo, G Trader, what's good? Espresso. Espresso's good. Babies. Babies. My little baby Sophia, 4 months old. Her cheeks, they're just kissable. And they're wonderful. They're... Oh, goodness. She's such a cutie pie. Oh, sheesh. I don't want to go hug her. I want to go hug her. You know, when I finished my 3rd espresso, I went over, hugged my 4-year-old. I said, I'm so lucky to have such a cool 4-year-old. I picked him up, gave him a bear hug, and he's smiling into my shoulder. He loves it, right? You know, it's just all this positive affirmation that he's a good person, a kid, and his dad admires him, blah, 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 right? And my wife came over with Sophia in her arms, and she bear hugged Ben from the backside with Sophia in our arms. And my wife said, because she, you know, we're on the same page. She says, we have such a cool family. I love our family. And Ben says, me too. We have the best family ever. And I was like, I am so lucky to have such an awesome wife and an awesome little girl and the coolest little boy ever. And Ben was just sitting there in the middle of it all. I'm holding him, carrying him. My wife's squeezing him, and he's just melting. There's just nothing. There is nothing like having a family and having love. Anyway, one of my rants coming up here. My in-laws are going to be married 40 years. I told my wife, I'm on thin ice saying this, by the way. I told my wife, 40 years. That's a long time. Congratulations are in order, huh? I just start laughing. My wife's like, yeah. I'm like, yeah, isn't that should be every couple's aim to stay together miserable for 40 years? I told you I'm on thin ice. They're miserable. So it's not about having a family and being together if you're miserable with each other. If you're married to somebody and you're miserable to them, like, do yourselves a favor. And your kids. Anyway, look at me talking about giving marital advice. But anyway, we all know a miserable life is no good life at all. Yeah, well, maybe you saw Ben, but that's the 4 month old is a little girl. She's 4 months and she's losing her hair, so perhaps she looks a little boyish. She's losing her hair right now and getting like she's losing her baby hair. So it was long at first, and then now it's kind of like babies, they just lose their baby hair and then the new set kind of comes in or whatever. But bing, da 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 da. This might be stops above a one lot position, ladies and gentlemen. Da 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 da. Da 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 da. Da 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 da. Ba 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 bum 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 bum. I see a hesitation to sell this market. Oh, there it comes. Whale. All right. At what point do the longs really start to feel pain? I mean, the longs aren't feeling pain here, um, yet. It's the shorts that are hurting. All right, let's go. Ay, 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 come on. Mm-mm-mm. Here, here, bing. All right, there we go. All right. Appraiser guy. Um, how you do make some assumptions. You make lots of assumptions. But if you start to frame the market that way, um, so hold on, hold on, hold on, hold on. Yep. If you simply start asking yourself the question, if you see these rotations and certain points that have volume node, we're coming up to them the first time. If you ask yourself that question, might there be shorts or longs in pain because of a prior volume node that we broke out of? And then you start to look at order flow and you see the aggression, then you have your answer. Hmm. Shorts now covering below this low. Uh, that order had no bracket on it. That's ridiculous. Let's see. 12016. Bracket. All right, there you go. Hello, Penny. If you, oh, nice volume here. Where are there going to be stops? Oh, big sweeps. So you see the longs here on the E-mini? We're very uncomfortable below that right there. So they market sold here. So longs are nervous. How do you know that short term? The sweeps tell you. The big volume and movement. So the get me out right here at almost any cost on the E-mini looking at the tape. That's all. That's what that was. Get me out. So they're in pain. Can you see it? That was order flow. Penny says, does the ES or the NQ lead the way most of the time? So Penny, what are they? They are equity index futures that represents a basket full of stocks. The ES represents 500 stocks, and it's market cap weighted. And the market cap weighting of the stocks that are in the top 10 of the S&P 500 are a little less sensitive to movement of stocks like Apple. So the question is not whether one leads the other, right? Did they both move according to the underlyings? Because they're tied to the stocks. The question is one more sensitive to the concentration of large caps that are found within each index? And the answer to that is yes, the NASDAQ is more sensitive. So therefore, if you keep a complex of charts up, look at me missing my short here because of talking. Oh well. I talk so you guys get paid. Sometimes it happens, but whatever. If you keep a complex or a like a 5 or 6 chart screen up of all of the highest market cap stocks like Apple, Microsoft, Amazon, Tesla. Here, I have it up. So let me go. Google, NVIDIA, and you have them up on a separate screen. What you will find is that as these things make moves, especially Apple, which is massive market cap, as it makes moves above and below support resistance, you'll find the NASDAQ makes sharp moves in response to those big tech monsters, and the S&P 500's moves are more muted relative to a single one of those names. So yes. So the answer is not, does one lead the other? The question is wrong. And people get this wrong all the time. The question should be, is the NASDAQ more sensitive to price movements of the underlying? And the answer is yes. Now, if the largest cap stocks are not as volatile on a certain day, then the NASDAQ will not move as much relative to the E-mini or compared to the E-mini. The E-mini, if a broader
group of stocks are moving in unison, it will move more. And that's why you have some days when people frame the question that way. That's why you have some days people say the Nasdaq is leading, and then other days the E-mini is leading, and then they just quite simply say, well, the E-mini is leading today, so I'm going to go with the E-mini leading today. Well, they don't know why. So if I answer the question the way you framed it, I'm I'm answering the question in a very overly simplified manner, which can then be destroyed by somebody with real knowledge of how these things move on any given day. So I'm giving you the accurate, detailed answer so that you're informed, and maybe you go put up a 6 chart thingamajigger, and maybe in Toss or some free equities platform, and you start to use technical analysis on them, and then maybe you look at like the way the Nasdaq is moving, and you're like, "Holy cow! I have a cipher." It's a little more difficult, but once I got good at TA with all these other charts, and I realized they're all in support, I can know that the Nasdaq is about to bounce right now. What? What? You're like, can you demonstrate that? I have open positions in my Toss account right now, and it's not completely set up not to show you account numbers and what I'm long and what I'm short and what I own and what I don't. And so I can't show that to you guys right now, but I'll show it to you guys in the future if you stick around. Anyway, if you like what you hear, just hit like on the channel stream. It helps the YouTube algorithm a little bit, and keeps me streaming and all that good stuff. So 12:25, guys. I'm still going. Man, is my sister-in-law here? Yeah, no problem, Penny. And now you have the real answer to that question, Penny. Don't let anybody convince you differently. Say, well, I know why it's doing that, and that's the wrong question. Ha ha. I used to have arguments with people about this. Like, that's not really how it works. Well, I know, but we're just trying to shorthand what's working for today. I'm like, well, yeah, but I know the Earth looks flat, and it appears flat to our eyes because we're on the surface, and it's a really big surface. And we can say that the ground is flat, but when we're referring to the Earth and the curvature of the Earth, let's just say it's curved rather than saying it's flat, because then people don't get confused later when we talk about it. Okay? They're like, oh yeah, that makes sense. So that's the analogy, right? Is the Earth flat? Yes, especially some places. From my ant-like perspective, go to the ISS. It's definitely not flat. Kyrie Irving, if you're here, sorry, bro. Ay, ay, ay. Mm. Kyrie is a flat earther, by the way. He hasn't watched the International Space Station. What was it? There was somebody that went up there and took videos and stuff. Oh, so cool. My 4-year-old was like, "Daddy, I want to go up there when I get older." I'm like thinking, "No, please, no." I mean, it's like claustrophobic to me up there. But if you Google it and you watch YouTube videos, you'll see some. Maybe it's on some I don't know, cable network or something. I have the theory, the Earth being donut shaped. Hey, you know what? String theory, my friend. String theory. That works too. Brian Greene. You ever read that book? Appraiser guy. Yeah, it's all good. You know, if you're a flat earther and you really try hard with the science, I can have some respect for you. Golly, what a damn lousy short that was. I expected like a pro to get back in at new highs. What a dummy. What a dummy. Can I just lament my own trading for a second here? What a dumb dumb. Oh well. What you gonna do? Ding. Ding 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 ding. Ding 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 ding. Da 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 da. Uh-huh. Ba 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 ba. Ba 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 ba. Ba 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 ba. Ba ba. Ba 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 ba. Ba ba ba. Ba ba ba. Bum. Oh, sorry. Kermit. No, man. The worst, isn't it? Stops above. Stops above this node. Stops above the node. Stops above the node. Nope. Didn't get it here. Back down. That's okay. Oscillate them out. So stops like in this uptrend we have going. Stops are above here. And you'll probably, here, let's get the color right. You'll see it right above this area. See that? See that? How the stops are all up in there. Man, that sucks. That's not good. Don't want that. I really thought it was going to rotate and spring like mad through here. Still might. Let's see. Man, I was like 2 ticks away from getting filled up there. No, I don't know what it is. Maybe 2 points. You son of a gun. Look at that. Look at that insta rejection. Foomp. Batten down the hatch. Okay. Bing. All right, let's see. This one can be, let's see, like this. Maybe. Yeah, like that. Oops. Nope. Tight stop. Might piss it away. Nope. There we go. Oh, that's not good. Gonna go take us out. Losing the 10 SMA. You try and you fail. See? Bummer. Oh well. What are you gonna do? Well, you know what you're gonna do? You're gonna buy here. Why? Why are you gonna buy here? Okay, right there. 971. Here. And here. Oh, we're not gonna get what we want. Ugh. Are we not gonna get what we want? That's probably what's gonna happen. Why are we not gonna get what we want? because the ones you want, you never get enough of. This is Murphy's Law, isn't it? Yeah, it would have made sense. Because well, yeah, I mean, in hindsight, it made sense. But, you know, we're in an uptrend and we're holding the 10S, we were holding the 10 SMA here. And you see how we came into it, blah, 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 blah. And markets typically, when they hold the 10 SMA, they spring and then they keep trending up. So the E-mini is right there on the 10 SMA. NASDAQ is a little bit different, but the NASDAQ has some interesting structure here, right there. Okay? And that is likely going to give us a pop here to the upside. So we'll see. Hmm. Da 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 da. Oh, look at those skipped strikes right here. Look at that. Look at that. What are we long? 4 or 5? Yeah, something like that. All right. Oh, go get us. You have the brackets off, don't we? Oh, you know what's interesting about this position is that look at that skip strike right there. Look at how aggressive they were to go get it here. Isn't that interesting? Nothing like pure delta, huh? Let's do this. Here. We gotta put some. Oh, jeez. 2, 3, 4, 5, 6, 7. Okay. That'll get us out. Right underneath this node. You know, if we're wrong, oh well. You just gotta accept it if you're wrong. Yep. So you can see the theoretical. Um, hey, we went negative on the day. The theoretical. Another spot. Really? Are we having another one of those Fed reversal days? The theoretical average price on that position earlier went way up to here, right? In other words, when you had one left, you're realizing these losses on the stop loss. Price has got to go all the way back up here to break even. So that's what it's doing. That's it. Hmm. Da, 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 da. Mm-hmm. All right. Get rid of these stops here. All right. Bracket on. Bracket on. Feel like it's flame on. Oh, look at us lose our position. All right. Man, I hear somebody outside of the office. I wonder if it's. My wonderful sister-in-law. 12:38. Is she here? She might be here. What's the reason for getting king here? I just wanna be kinged. King me. Um, I don't know because support the right here. So this is a big consolidative zone, and then we have the 20 SMA here, and this market just slowed down. It took out some stops here, but it takes out stops, and then the rate of buying went way up here. So I guess it's like order flow, right? They're all covering out. They might take it lower. But a lot of times when they start buying like this and then the shorts get a little off sides, we shoot back up. So that's the reason. This is a 5 minute chart. And so it's a right up here 10 SMA and a 20 SMA off of the 5 minute. Might just be wrong again. Oh yeah. Well, I'm wrong already again for more losers. Kind of sucks. Anyway, breakout here. So another bounce. How many times are you going to be wrong? A bunch. Okay. I think we'll be okay. I hope. Oh shoot. It's going good, man. I had a nice day on the Nasdaq. 571 points on the NQ. Um, Something like that. Da 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 da. Now this node might have some shorts above, or on first tap, I go oscillate back down, get my stops, and then go get my profit takers. It's all right. What time is it? 12:43. Is it time for Goldman to start buying? Straight up to the upside? Who knows? Who freaking knows? Yeah, chirp tone. Markets, the most difficult thing for me trading markets is Me, I know you're talking about trading style, but for me, the most difficult thing with markets is adapting to when the market changes. It's just so difficult. Hmm. All right. Well, that's all she wrote. Oh well, little girl's making some noises. What do you think? You gonna go back to it? Oh well. Miss one, you miss another. Oops. Oh, and another. Another, please. Violence. These guys are showing me violence here. I'm getting pillaged repeatedly. Hey, not a professional trader. I appreciate that. Feel free to talk about other channels here. Feel free to talk about funded accounts. Whatever. It's not a big deal. If you think there's a really great YouTube channel that we should all be looking at, go for it. How much can you piss away into the close? Let's see. See, my attitude is my stops are going to get hit. So what? Takes the pressure off when you expect to potentially lose on a trade. Goes lower? I'm wrong. Oh well. Oh yeah, that happens. What are you gonna do? This is an interesting spot because on the E-mini we're on highs. Oh, slipped it. That's it. Really? Can't believe they just did that. Sheesh. It's jacked up. 1248. Um, who wants to be long at the rebalancing algo today? Anybody? Raise your hand. Anybody want to be long at the rebalancing algo today? Not I. Hence why I'm like, yeah, we're bouncing here off the prior high on the E mini, and then I'm like, wait a second. Hmm. It's an eventful day. These Fed days are awesome like that, aren't they? Really awesome. All right, coming in. Let's get a better view of this whole thing. Yeah, we might rip up. We'll see. You're like, what are you talking about? We're dripping down. Yeah, we might rip up here. Right? Volume here. Volume up here. It's the higher time frame stuff coming in, isn't it? Right? All this trapped longs above us up here, right? Weekly high volume node, 518 upper singles, right? It's this higher time frame stuff right now dictating what's happening here. Well, that was a nice stop run. You see that? That was some craziness. The little girl. Can you guys hear her? She's like squawking. My wife must be cooking, and she's probably on the ground trying to get everybody's attention. Like, come pick me up. I can't wait to go pick her up. All right, so big moves here on the NAS. This is about where everybody wants to short, by the way. And then they get ripped. A new one as it goes straight up. Thanks, Dirk. Hmm. Yeah, this is where everyone gets. I think potentially. Who knows? Who knows? But you're right, Dirk. European session highs here. Go trap those. Go trap those Swedish players right here, right now. 3 hours on a treadmill, guys. How far have I gone? It's only 2.2 mile an hour pace here, so in 6.8 miles. Yo, 20 or dollars, 2D or 2 donuts. First week here, great to finally catch a live session. Just a quick thanks for all your prior videos, really helps. Cool, I appreciate that. If you haven't liked the video, that helps. If you have, thank you very much. Appreciate it. I really enjoy being here with you guys and talking about markets. I know there's a few moments where there's some. Thank you. There's a few moments where it gets a little, a little dead or whatever. But I I'm passionate enough about markets that I typically will just talk and talk and talk about trading because there's so much to talk about. I mean, there's just so much. And there's so many scenarios, real scenarios, not just BS. I'm changing it after the fact because of bias, but there's actual scenarios in the market that really um, help us. Oh, look at this. Into the wick high here. I was going to say, should get long. Oh, this market is interesting. It's just like, huh. Let's see. Do we get out? Yeah, that's so crazy. Data feed is a little bit sketch. A little bit. Just a little. Right here at 36.37. Here they go. Come on now. There we go. Ah, oh, is this the way to lose money fast? I think this might be. Oh, we'll see. Did we get it? That's the question. Is did we get it? No, we just gotta stop. Ah, that's the worst. We're gonna get stopped again. Oh man. You know, I put a hmm, I just think we're gonna go get the stops up there. Above this high right here. Ay, that's terrible. So I put a stop limit buy here, and it stopped me and everybody else in, and then it went back and took my 8 point stop. So this was like, if I get stopped in and it shoots up, I get 16 points, but my stop is 8 points. That's what that was. That was a stop limit buy to trigger in. And all it did was triggered me in, they collapsed it, hit my stop, and then I lost a quick 8 points. Yeah, I think we're still about the same point here. Oh, that sucked. Uh, that shit is funny. You gotta admit, that's pretty dang funny. Alright, let's try. Where's the 8 point? Okay, there it is. Wink, wink. Uh oh. We're looking for the 1 hour trade. Is it gonna work out? Is it gonna work out? Oh, ah. Yes, come on. Now it works out. Okay. Tony, what's happening? Tony, I in on the feed, I lost a lot of money. That's all that matters. The after the fact results don't matter. On feed, I lost a lot of money. Well, not a lot, but I lost money yesterday. But you can watch the whole thing, Tony. Just watch it all. And today, you can see all of the results on these micros. So typically, what I do is I'll trade e-minis in the morning. Even gods can bleed. Well, yes, but that doesn't apply to me. Um, let's say it this way: all traders eat humble pie at some point. That's just what it is. And if you claim you don't eat humble pie sometimes, um, then you're not in your grandma's kitchen. And if you ain't in your grandma's kitchen, then you ain't a trader. Because this market is your grandma's kitchen, and your grandma always serves some humble pie sometimes. That's just how it be. That's how it is. Anyway. Oh God, I'm so mortal. Someone told me. Oh, it was Simsum from Israel, and he left in the comments and said you lost. Great. I don't know. I remember. I can't remember how he said it. You got a good attitude or something. And I was like, I didn't feel like I had a good attitude inside. Inside, I was like mad that I lost. I hate losing. Right? I'm competitive like anybody. Um, I don't like losing. But if you can't accept it with trading, then you're going to have a painful time. Here comes settlement. Here they come to sell them again. 9 half trades. 8 half trades. 7, 5. Oh, it's too much. It's too much. It's too much, I tell you. You guys know what I'm talking about there? It's my old introduction to some of my. That was a flash crash audio. Oh, too fast. This market is too fast. Let's go. Ay. Ay. You know what I wanted? I wanted a pop straight up to here. And a pop straight up to here. And then sell it to settlement. Way too fast. Alright, T plus 2. 30th percentile. You guys see it? You see it? 30th percentile T plus 2. Mirren gains. Um, Mirren gains. It happens. Don't beat yourself up. It's a marathon, not a sprint with trading. It's Kermit. You know, a lot of my old videos have that flash crash audio. Um, I don't know. It's if you Google 2010 flash crash audio, you'll come up. It's like they're talking about like it's too much. It's too much. All right, guys, coming here in a big way, right? 9 half trades, 7 trades. Oh, and it just keeps falling. It gets worse and worse. And Navinder Suresh is clicking in his attic in his parents' house in London, and he's spoofing it down. And the markets, the algos are not reacting well to Navinder's 2,000 lot spoofs with his algo that from the trading technology algo that pulls his ask repeatedly every time his place in the queue gets too close to being filled, and then it moves it back a tick to go back of the line, FIFO, first in, first out. So he wants to be last out, right? And so he's never getting filled, and he's spoofing and he's spoofing and he's buying the other side and scalping the bid and the ask. That's an illegal order type now. All because Navinder was smarter than Citadel. And they got mad. And so they contacted the CME and said, we can do it. He shouldn't be able to. Because he's not us. We have special rules. F you. F you. Fat Cat Wall Street MFers, right? So wrong. It's so wrong. You shouldn't have special rules. All the HFTs with their special rules. But anyway, that's the game we play. We're at a disadvantage. Don't focus on that, because then you'll just piss yourself off and have somebody else to blame for all your losses. Learn to play the game and how it's being played. You're playing against Kareem Abdul-Jabbar every day, and he is located 5 feet away from the hoop. And you are 5'2", 5'3" Muggsy Bogues. Deal with it. Steal the ball at his feet. Deal with it. Once he gets that thing above his shoulders, he's either going to turn and dunk it on you, or he's going to do his little patented hook shot. and just practice it and say, "Hey there, little guy." Yeah, Kermit. Oh man, your name reminds me of Kermit Washington. Kermit Tumbleweed. Remember when? It's probably maybe it's before your time, maybe not. Kermit Washington broke Rudy Tomjanovich's face. That was craziness. I don't know that that video is anywhere online. It might be. It might be on YouTube somewhere. But craziness, man. So what do I think of the fake breakout here? I don't know. I think it's we held a little bit here. It's too early. I mean, on the 30-minute chart, we went above this important level into 39.76. And as you can see up here, this has been marked for me. This region has been marked for me as an area of potential trapped longs. Did I play it well? No, I did not play it well. I did short the NASDAQ and took the tiny little move rather than taking the bigger move like a dum-dum, right? So, that happened. That's the thing. What are you going to do? So, yeah, I don't know. We'll just wait and see. Let's see how this goes. I mean, bear market, right? You just keep selling bounces until that doesn't work. It's the same thing that you should do as in a bull market, right? You just keep buying dips until it doesn't work. What is that guy's name? Picturing somebody. What's his name? He's the same guy that I do the from. What's his name? I Fund Traders. I Fund Traders. What's that guy's name? Oh, thanks, Dirk. I think. What's that guy? What's that guy's name? I Fund Traders. Light skinned black dude. I love that guy. What's his name? I'm googling. I Fund Traders. What's his name? Oliver Velez. There you go. Good old Oliver says, and I agree with him. It is the job of the professional trader to buy pullbacks and uptrends and do the opposite in down trends. Yeah, Oliver. Like, simple, easy peasy. Just do it. And if traders just did that basic thing, right? Buy pullbacks and uptrends, sell pullbacks and downtrends, and use some simple moving averages and plate structure, they would be so much better off. It's true. He is so right. He is so right. And it seems so easy to do in hindsight. But that's why I have the 20 SMA on my chart. Yeah. It's why I have the 20 SMA. I used to have the 200 SMAs on my chart and have 2-minute candles. And I learned a whole heck of a lot from Oliver Velez's videos. He's one of the guys that really gets it in terms of trap traders and price action and what it should look like, right? So GBI, green bar ignored. RBI, red bar ignored. Are you below the 2-minute 20 SMA and the 200? Are they aligned over each other? Right? Okay, well, you're trending down. It's your job to sell that thing on the 2-minute. Sell it. Go with trend. Most of the time, if you look at order flow and price action, at least on stocks, right? That works out very, very well. But anyway, you can watch his videos. I am not the best person even though I've watched all his stuff. I'm not the best person to talk about somebody else's to talk about his videos as well as him. He's entertaining and he does a great job explaining his strategies. So, anywho, all right, I think I'm done. I think I'm gonna get off, go enjoy my fam. What is this? 145 times 2, 3 times 5. So 145 times 2 is what? 290 plus 15, $305. So we'll say $300 on NES MNQ. That's what it was. Have a good evening. Thanks for watching, guys. I appreciate your viewership and support very much. And thanks for chatting with me. It's really, really enjoyable. And I hope you guys had a good time. Hopefully, learning a little bit um, over a decade. So I hope you guys had a good time and learned some stuff. And keep the questions coming. I appreciate the support very much. Please like, subscribe, all that good jazz. I do appreciate it. And have a good one. Ciao.